The rotation out of the Magnificent Seven and into lots of other areas continued today. I say get used to it, because it could be with us for the whole month of December, given the tremendous excitement it's generating among new investors who want to buy the stocks of companies that sell things they like and make things they use. And that's how you get the longest weekly winning streak for the Dow Jones Industrial Average in 2 years. Dow jumping 295 points just today. S&P gaining 0.59%, Nasdaq advancing 0.55%. That's right, the buyers are broadening out, and they seem to be focused on anything that hasn't had much of a year until this week. Down and out retailers, stocks hurt by the weight loss drugs like fast food companies, and makers of sugary snacks, even manufacturers, their stocks are all running. And you know what? I think it makes a lot of sense. We're in the most sensational of moments when the Federal Reserve is debating whether to stop its rate hikes. We get snippets from them every day. Today, Fed Chairman Jay Powell gave you that kind of mixed message that represents the current zeitgeist. There won't be any rate cuts anytime soon. But then again, there might be no more rate hikes either because inflation's been tamed. So what makes this such a special moment? Simple. We want the yield curve to do the talking, not the Fed. As long-term interest rates go down, and they fell again today, it gives the Fed more leeway to cut short rates. See, long rates are reacting to a slower economy and a weaker dollar. That's just fine. Honestly, I wouldn't want to hear Powell say that the Fed's willing to cut rates very soon, because then people would instantly assume that something catastrophic was about to happen with the economy. Right now, we've got a Goldilocks situation going here, an economy not too hot, not too cold. So with long rates falling, the money will continue to flow into stocks, but not stocks that have already run up big. The new winners are stocks that can roar because the Fed will eventually cut rates. That's enough to motivate those on the sidelines who don't want to miss out on the action, but don't really want to buy stocks that have already ran. Their mantra, let's go buy the downtrodden, the forgotten, and even, yes, the riskiest of equities, which I covered just last night. Many of those stocks soared today.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.